Hi, everybody. I just wanted to take a moment to backtrack and kind of re explain and re break down financial statements. I do have other content regarding financial statements, but I think I dove in and provided a little too much info and maybe needed to simplify things a little bit more. Okay, so let's start with the basics. Financial statements. What are they? Who needs them? What are they used for? And things like that. Okay. Financial statements are reports that tell me somebody's net worth and their earnings for a given period of time. Okay. So the balance sheet is the first part of the report, and it tells me your net worth. The income statement, or P&L, also known as profit and loss, you will hear those terms interchanged, by people, and it's all the same thing. An income or loss for a period of time. Okay, so let me kind of piggyback on that. So, what is a financial statement? It is a two-part, can be three, okay? But I'm going to just stick with the basics. It is a two-part report that outlines one's net worth and earnings. This can be for a individual or a business or corporation. Okay, they are used to determine an individual or a business's net worth, and it really kind of is a way for creditors to know the type of risk they're taking when they look at this. They want to know your debt to income ratio. They want to understand how much of a risk they're taking if they are to lend you money or extend you some credit. Okay, that's really what it is. And anyone that is looking to obtain credit or rent a property, things like that, anytime somebody is wanting to get your financial picture, they're going to ask for this information, right? Another way to give this information is by filling out an application, which so many of us do, and you don't realize that you're building your financial statement for them when you answer those questions on an application or a credit application or an application for a rental, right? When they ask you the balances of things and, ask for your pay stubs or whatever proof of income that you might have, that is what they're trying to build, okay? Some of us have them already ready, and we can give them those pieces of information, and they might not need you to fill out the application unless it's a requirement, right? So what exactly goes on to these reports? Let's break it out. Okay, we already established that the balance sheet is your net worth. This is what I typically care about more than an income statement. Okay, an income statement zeroes out every calendar year or fiscal year ending, depending on what you're dealing with. But let's assume that everybody is on the standard calendar year of January through December. Okay, so that means come January, this zeroes out and you start at zero again. Okay, we start all over again because it's only for a given period of time. However, the balance sheet, this does not change unless we make payments or pay things off and things like that, right? These are cumulative, meaning it's never going to zero out unless certain things occur. And I can break those out in other content. But as an asset you want to think of as anything that we can cash out or sell for cash. Okay, I was going to say for profit, but for cash. So that would consist of bank accounts, vehicles, only purchase vehicles, not leased, properties, life insurance, and loans to others. Okay, there might be other things that would go there. However, I'm trying to keep this as simple as possible from an individual level. Okay. And under your liabilities section, we are going to list credit cards, loans, any kind of loan, auto, mortgage, personal, student, anything that you may owe for that is tied to your social security number in an individual case, or your tax ID if you're a business. That is going to be listed in liabilities. Okay, so it's really kind of hard to lie about these, even though some people choose to withhold or omit certain liabilities or assets. once again, know that these are tied to your social security number, so it is easy for one to find out what those are if they were to pull your credit or pull your tax filing, right? Tax transcripts. Okay, and I'm not going to touch on equity, but too much. But what I want anybody looking at this to understand is your assets. If we were to cash out everything that was listed in this section and pay off everything that is listed in this section, whatever we have left is equity, or what I consider that is what you would call what you have for generational wealth. That's what you can pass down to your family or whomever. Okay, that is what it is. Now, in the case where you have more liabilities than you have assets, know that at the end of the day, your estate or whomever is taking over is going to basically have to come out of pocket to cover anything that's not paid off, right? Okay, and in the cases where they aren't major assets, like for example, like let's say you only have a bank account and you have some loans and credit cards. So once we cash out the money in your bank account and pay off whatever you owe to these creditors, if it is not enough to cover, most likely they will issue a cancellation of debt so the creditor can write it off on their end. That is the only reason why we get these tax documents associated with our social security number. If somebody is claiming the expense or write-off, somebody else is claiming the income. Okay, and I'll get into that a little bit more as we go on. Okay, so income on the balance or on the P&L is going to be anything that you've received in the calendar year. It can be wages, it can be company profits, it could be refunds, cancellation of debt, it can be the interest from your bank account if they're interest bearing, right? And expenses are all monies that you've spent during the calendar year that doesn't go towards anything on your balance sheet. And I will explain that more later. So when I look at these for individuals and I see that you made $1 million, but you spent $1 million, that's not very impressive to me because it doesn't go to anything on your balance sheet. The balance sheet is what your net worth is. So that is always going to be more important to me than what you did for a year, because you can have a great year, you can have a bad year, you can have, that's kind of the flow for most people. But that's why this stuff is so important, because if we want to create wealth, it starts here on the balance sheet. And if you don't know or aren't constantly looking at this, it's not going to always be important to people that aren't really looking at this. And it's like, okay, the name of the game is to get as much in this area as you possibly can, okay, and not as much in this section, okay? So let me dive right into some of these flow charts and kind of how this all works in the real world, okay? So now that we have a clear understanding of what goes on what, okay, I'm going to jump over to my flow charts, okay? So what happens, and I'm going to go ahead and hide this for a second, okay? I'm going to hide this because this is what we're dealing with. So when you are here as an individual, let's change it, okay, so at the individual level, let's just say, so we're going to just say you have a checking account, you have a savings, you have a vehicle, okay? Those are the things that go there. And then you might have, I'm just going to keep it really simple. And over here, you might have an auto loan, okay? And maybe a credit card, okay? So this is what that looks like, okay? And then when you get a partner or spouse or any of that, okay, I'm going to just go ahead and unhide this. Okay, this is, I'm going to just outline this as if, you find a partner or spouse, then they have their own balance sheet and P&L, right? I'm just going to, for the sake of argument, I'm going to say that these are the same, right? So this is kind of the the flow chart or what it looks like when you get a partner. Okay, when you have children, I'm going to go ahead and hide this. Each child would also have their own balance sheet and income statement. Oftentimes it's zero, but when we have people that leave things to their dependents or their family, a kid could very well own more than the parents at this point, okay? But let's just assume that this is what it is. So when you find a partner, you start your family, every single one of these is associated to your social security number. That is why we get a social security before we even get a state or government issued ID. It's because primarily you're going to be claiming your kids on your taxes. So you need their social security in order to do that. So in order for you to claim that you had expenses for being responsible of raising I didn't want to say child, but when you're dependent, okay, that's why we have social security numbers. So in order for you to claim them, as you know, you need to have their social security. Okay. Now, what happens when you have a business, right? Let's say your partner or your spouse has a job, so they're getting their wages and expenses. Okay, I'm just going to keep it really simple. And then for a kid, let's just assume your child is not, or your dependent is not making any money, but there are costs to maintain and raise them or support them, right? So let me open this up here because I'm going to assume as an individual, let's just pretend you own a business. Okay, so this is what happens when you have a business. Your business now has their own balance sheet and income statement. So your business has their own financials. Okay, and how does it correlate with yours? I will explain. If you are a sole prop, everything that's listed on your business financials is going to be claimed on your personal tax return. If this is a partnership or corporation, what happens is your business will file its own tax return, and then in turn, they issue all of the partners or owners K-1s. A K-1 is a tax document that tells that one, it proves your ownership, okay, and it also tells the IRS and your state taxing authority what your share of the income or loss of that business is. Okay. So profit or loss to be claimed on personal returns. Okay, so that's why we issue the K-1s. So when a business issues a K-1, that then in turn goes onto the balance sheet as an asset, or you're just claiming as the income for the year. Okay, for the most part, you're going to be claiming that income for the year. So we can just put profit, business profit. We'll just call it business profit. So that is issued on a K-1, right? Actually, let's put the K-1 here. Okay, and then from an individual level, when your partner or spouse has a job, their job will issue them a W-2. That W-2 will outline what they made for that year, and it will also list taxes and things that were deducted from your check. Okay, all those withholdings for federal and state, okay, all of those withholdings, if you want to be technical, those would be listed on somebody's balance sheet as an asset because it's your payments that go towards your tax liability. Okay, so those technically are reported here as an asset because those will be deducted from your tax liability for the year. Okay, and then typically for kids or dependents, they probably aren't earning much money, and if they are, it's not enough to sustain them, which is why you get to claim them on your return. So typically, it doesn't matter what the expenses were. Let's just say it was $30,000 to raise this dependent for the calendar year. You are not going to get to claim that, just like you wouldn't get to claim any expenses over a certain amount. Okay, That's how it works. So in cases where people say, "Oh, it's a tax write-off, it's a tax write-off," not all things are tax write-off just because you incurred the expense. Okay, but there are ways to kind of get around that and to kind of classify them differently, because one of the things that I try to get business owners to understand and why it's so important, even in a sole proprietorship, if you can't claim certain things under your business, you may get to claim certain things under a personal level, and vice versa. Some things that you wouldn't claim as an individual may fall in line to a business expense that we can claim. So there is rhyme and reason to why we separate those things, not to mention the only way for me to be able to build somebody's business is to first and foremost identify what the truth is, which is really hard for some people, okay? And then being able to kind of know where we're going to claim that and where we can't, because there's a lot of things that are not claimable from a business owner's standpoint, and I think most people don't fully understand that. And paying yourself from a business, if your business is not profitable, you are not getting paid. Okay. And I think that's kind of one of the biggest misconceptions that people are under. Well, I'm running a business. If that business is not profitable, you are not earning. Okay. And there are a bunch of other rules and different things that would apply, but this is just the very basic breakdown of financial statements, what they're used for, and how they kind of tie in to your overall picture, and tax documents. Okay, know that when your bank gives you a 1099 INT, which is for interest, it's because they're telling the IRS that you earned XYZ amount of dollars or less in interest income. So if you forget that little piece of information, they can flag your return because you forgot to add that you made $10 on a savings account or whatever the case may be. So there's a lot of reasons to understand this, even if it's not something that you're able to build out at this time. Some people think it doesn't matter because they don't have a ton of money, or they're not doing much. Well, this is the basis for everything that you're going to do, and this is also a really good motivating factor for a lot of business owners and a lot of individuals when you kind of look at it in this respect. Okay, my goal and hope is that I will continue to be able to put out more information for the greater good of the general public, and provide as much detail and understanding for the basic concepts that aren't being taught in schools. So hopefully this was helpful, more so than the other financial statement videos that I've put out. And if it is not, stay tuned. Be sure to comment, like, post, and subscribe, and tell me what it is that you'd like to hear or see as far as content. Thank you.